My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Everyone I know is focused on the shape of the stimulus negotiations. They know nothing. They're hanging on every word from Speaker Pelosi or Secretary Mnuchin while we're watching the laconic Mitch McConnell's body language. We need to know if cash-strapped states and small businesses will get the help they need. But the stock market's already made up its mind. It doesn't matter. And that's how we can have some solid action today. Dow advancing 35 points, S&P rising 0.53%, Nasdaq soaring 1.42%.
That was easy.
We're starting to hear about huge layoffs at Allstate, okay? At Disney, smaller ones at Goldman Sachs, possible avalanche of firings at the airlines. These people are losing their jobs through no fault of their own, and I really hope the government can get its act together to help them, because it's the right thing to do. The broader economy needs a stimulus package. We know that, right? America needs a stimulus package. Small, medium-sized businesses getting crushed. But the market, oh, man, the market doesn't see a recession. It sees a secular boom in certain industries, and that boom will blot out the parts of the economy that are most fragile. I think we'll have an L-shaped recovery on Main Street and a V-shaped recovery on Wall Street. I know this because we're starting to get earnings from defensive companies that would normally give shareholders huge windfalls. Yet they're being greeted with a yawn or with outright selling. Case in point, PepsiCo. The soda and snack company reported it was at 6:01 this morning. I saw it and I said, holy cow, substantially better than expected quarter, aided by all the stay-at-home snackers. And I was thinking, wow, I mean, this thing's going to be up 4, and I sure hope everyone has Pelotons at home to work off those empty calories. 4, maybe even 5. That's how good it was. You have 4% organic growth, for heaven's sake. Quarter was a thing of beauty. Yet Pep's stock actually fell near the opening of trading. It was that disliked. I had to excoriate the darn sellers when I was squawking on the street this morning. And somehow, after a torturous morning, it was finally able to rally. I mean, I was just saying, just go buy the stock. Well, thank heavens it did. And by the way, that's the best of them when it comes to that whole consumer packaged goods group. Conagra, packaged food company, Constellation Brands, beer and liquor play. Well, they both reported stellar results. And what happened? Conagra did nothing. Constellation stock got hammered. Now, we're going to have both of them one later in the show to straighten out how business could be so strong. But the market's like the honey badger, doesn't care. Now, if we're going into recession, I bet PepsiCo would have rallied $4 in those numbers. Conagra would be up at least $1.50, and Constellation would be flat to slightly higher. Kept back by some supply constraints at a time when they need as much beer as possible because Corona and Modelo are flying off the shelves. We have McCormick on the other night, the spice company, and they reported a terrific number. But it, too, slipped lower after earnings report. Clorox remains well below its high, getting nervous. Do you know that we sold Colgate for my charitable trust today? We decided to tell members of the ActionAlertsPlus.com club that we're taking the nice game because Colgate's mainstays are too recession-proof. Toothpaste, soap. I mean, you use them no matter what. Market's got no love for that kind of stock. Oh, I felt terrible selling that. Such a fine company. I use all their products. But betting against the business cycle is a fool's game. Now, I talk about this. If you really want a refresher course and you want to know how all this works, I talk about this in Confessions of... Hey, look, that's as good version as any. I talk about it in Confessions of a Street Addict. When my hedge fund was starting out, I had this idea, you know what, just to own great franchise companies. Just owns the stock of Heinz, because there's never going to be some company's going to come in and take over their position. But you know what? That works during a period of economic doldrums. But the stock fell apart as Heinz even did well because the economy was on the mend. Nobody wants the packaged foods plays when the cyclicals can generate huge earnings growth. That's how these defensive stocks are trading right now. You want a stay-at-home food play that's working? I don't know. Try Pinterest. It's got good recipes. And, of course, buy Peloton. I mean, when in doubt, buy Peloton. Yep, the market's speaking loud and clear. The recession-proof names have gone out of style on the Wall Street fashion show because money managers are betting on an expansion despite what's happening in Washington. So what's in style? We have to listen. Let's be stock whisperers here. Let's see what the market is whispering to us. First, the most down-and-out retailers, the ones that need a boom to thrive, They did well today. I saw Macy's step by step, inch by inch moving up. Kohl's joined it. Kohl's! There are signs of an accelerated economy, no doubt, as they need a recharged consumer who's willing to go out and shop, or they can't make the numbers. Same with Nike's poor cousin Under Armour, with a stock that looks ready to break out. And Gap Stores, which seems like it's trying to mount the kind of recovery that we got from L Brands. Of course, some of the strength in retail could be the pin action from the amazing performance that we saw in Bed Bath & Beyond. But I think that's a mistake to extrapolate that. It doesn't really work like that. You see, Bed Bath & Beyond is now managed by a magician. His famous, followed by the name of Mark Tritton, late of Target. He's pulled a rabbit out of a hat here, much to the chagrin of a multitude of short sellers whom I got to tell you had a real bad day. They could have a Modelo on me. Bar's closed. Thanks for nothing. Anyway, Bed Bath sells housewares, which are doing a lot better than apparel. We're going to hear from Mark later on about this amazing turn in BBBY, which is not done, by the way. Let the short sellers try to knock it down and then bring it in. That's what we used to do on the trade desk. Bring it in. The mall-based Foot Locker is finally showing some life after spectacular numbers from Nike, although a lot of the strength of Nike comes from cutting out the middleman, which happens to be Foot Locker. Even the pathetic stock, Nordstrom, was up today. Could there really be a return to the mall? If so, people are richer and less fearful than it seems. They're definitely bored. Second, you'd think that the consumer-dependent tech stocks would be hostage to the stimulus talks, but they're roaring. So are the stay-at-home stocks that are technology-oriented. Remember, there are two prongs to the stay-at-home thesis. There's the lockdown component and the remote work component. At least for the moment, the lockdown trades aren't really working. America has reopened. People are going out again. I think that holds true unless we get another major spike in COVID, even if we do. But just because we're going out again does not mean we're taking unnecessary risks. Remote work is still the order of the day, and e-commerce is on fire, hence the surge in Amazon and FedEx, United Parcel. Hey, by the way, Doc, you saw me had them on the other day. Remember, they were kind of talking about how they do a deal with Zoom. Man, I'm glad I put that one up there because that's exactly what they do. Both stocks. Third, there are other signs of life that are truly positive. Look at the endless rallies in Penn National and DraftKings, the former casino company that bought a big piece of Barstool. The latter, an amazingly hot fantasy sport and gambling website. Full disclosure, they sponsor my bull market fantasy internet program. A lot of synergies. These moves show that yet younger consumers still have plenty of disposable income to wager on sports and, of course, on options and on SPACs. The demand for SPACs, thanks for mentioning them, many of which are good, continues to pace. I try to cover them all, but many of them are either hard to keep track of or hard to understand because sometimes they're just big piles of money where you have to hope management will make a good investment. You see, the success of these SPAC deals tells you there's a huge appetite for risk, both among institutional investors and home gamers, particularly those new to the market. As a matter of fact, I wrote a blank check to my painter today. And, I was getting nervous about the blank check until my buddy Haley showed me. There it is. I want to write a blank check. I'm afraid to write it for a painter. Some people, they're writing $400 million blank checks. What the heck? Put it all together. And I can understand why so many Republican senators are reluctant to spend a fortune on another huge stimulus package. The average suggests the economy is moving in the right direction. When Johnson & Johnson's down $2, but Darden, the owner of Olive Garden, is up $4, Skyworks, which makes the guts of high-end cell phones, up $6.50, and small business empowers Etsy and Twilio are screaming higher, ladder up almost 40 points on a pre-announcement of a better-than-expected quarter. It's clear the market is not worried about a slowdown. Can you believe I worked all those in? Remember, we're in a bizarre situation here where big business is booming, but small businesses are on the ropes. They're being snuffed out left and right. It just doesn't matter to the stock market because small businesses aren't publicly traded. Hashtag Bar San Miguel, BSM, no. Well, what are you going to have 8 tables in a business? The bottom line, as far as the stock market is concerned, we don't need no stinking stimulus. And that's absolutely true for your portfolio, but it's necessarily not true for America. A lot of small operators that don't deserve it are going to go under, causing a lot of workers who don't deserve it to lose their jobs. Unfortunately, deserves got nothing to do with it.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.